I am happy to be with you today upon the invitation of e-agricom, and would be glad to share with you the market situation and outlook of some feed raw materials. I'm Red Galura from SME Commodities. We operate three oil mills uh, producing coconut oil and copra cake. We also trade crude palm oil and crude coconut oil, among others. For our talk outline today, we'll have the macroeconomics view, and then the forex outlook, and then the macro feed ingredients, the soybean complex, our source of protein, and soybean oil for energy, and then for wheat and corn, our source of energy, and coconut oil and copra cake, palm oil, and European feed wheat. Sometimes nothing is happening in the supply and demand situation, but prices are moving. It's because of other economic indicators. So for the Philippines, our gross domestic product expanded by 7.6% in the third quarter of this year. Uh, the chart I'm showing you right now is from the Philippine Statistics Authority. So we're actually doing better than much of the rest of the world, with the growth rates exceeding 7%. Our inflation rate actually rose from 6.9% in September to 7.7% in October. This is relatively high, but compared with the United Kingdom of 10%, USA at 7.75%, we're still doing well, although other countries like China, Vietnam, and Indonesia are doing better in mitigating or controlling their inflation rates. To control inflation, the central bankers typically raise their interest rates. And then in the Philippines, to mitigate runaway inflation, our Bangko Sentral are poised to raise interest rates again by 3/4% or 75 basis points in November 17th, or yesterday, November 17th, to 5%. While for the Forex, we have had, Congressman Joey Salceda, an economic expert, saying that the exchange rate will go to 61 pesos and as much as 68 pesos, depending on the outside markets. But what happened was a lot of the experts are now being proven wrong because the exchange rate is actually strengthening. We're doing in the neighborhood of about 57 pesos to 57 and pesos and 50 centavos. My forecast is we may go to as low as 56.40 to the dollar, to a high of 57 pesos and 80 centavos within the next 3 months. We have had the meme on the son of our president, BBM, saying about the peso is not weak because the peso is weak. Actually, he failed to include the term against the US dollar. So the peso is weak. It is true against the US dollar. But the peso is not weak because we are also stronger. Our peso is stronger than the British pound by 5.2% since January 2021 to mid-November or today. So we are also stronger against the Japanese yen by 14.5%. And mind you, these are very strong global economies, and yet our peso is performing better. than the British pound and the Japanese yen, and including against the Korean won. And we're parity with the euro and also parity with the Aussie dollar at 37 pesos to to one Aussie dollar a few weeks back. So uh, since January 2021 to present, the rate of the peso against the euro and the Aussie dollar have remained practically the same. There are supply risks in the system, so we have had food protectionism with Malaysia banning exports of chicken, Indonesia banning export of their palm oil for about a month, and India banning the export of sugar out of India. And there is a threat also of Vietnam and Thailand banning the export of rice. We have had experiences of supply chain bottlenecks, delayed shipments. I'm sure you have been victimized also by the shipment delays and supply chain bottlenecks with adverse consequence of stockouts. We have had high freight costs, but freight rates have gone down dramatically from their astronomical heights, as we will see later in our charts. Still, we have had high fertilizer prices with their adverse effect on farm productivity, with farmers choosing to use less fertilizer. We now go to the US dollar index. The uptrend is over, but the corrective bounce will uh, keep the index choppy. So the US dollar index is actually uh, from a basket of major currencies led by the euro, with the index 50% weighted against the euro and 15% to the Japanese yen, British pound, Aussie dollar, and the Canadian dollar. And lastly, 5% weighted against the Norwegian krono. So the US dollar index is actually trending lower with a pattern of highs, lower highs, as you will see in the chart. We have also lows, lower low, and another sharply lower low. So the index is actually trending weaker, an indication that the US dollar has peaked and is now trending weaker against the other currencies, including the peso. So today we see the peso doing about 57 pesos and 20 centavos against the US dollar. But I see the peso appreciating further to 56 pesos and 40 centavos and doing a range of 56.40 to 57 pesos and 80 centavos against the US dollar in the next 3 months. On the Philippine Stock Exchange, why are we interested in the Philippine Stock Exchange when we are just uh, more interested on the prices of feed ingredients? It's because the Philippine Stock Exchange provides us a hint of what is to happen to our physical economy in the next 3 to 9 months. So with a short-term uptrend in the Philippine Stock Exchange Index, that indicates that our economy is on the way to growing and improving, and also employment rate will be rising. So we have a short-term uptrend, and hopefully this trend will continue, as you can see in our bullish channel. And I would encourage the young ones to actually invest in the stock market, because prices will continue to rise, in my opinion, when the pent-up demand from the quarantine restrictions are lifted. So I see prices moving higher for our Philippine Stock Exchange. We now move on to oilseeds, oil meals, and vegetable oils. But first, we look at the weather because most of the feed ingredients are actually agricultural commodity products. Uh, for the El Nino Southern Oscillation outlook, we are still in the La Nina phase, and that La Nina phase will continue until December to February. But it is expected to weaken and even go to the neutral phase come February to April of this year. La Nina is associated with the above average rainfall in Southeast Asia, including the Philippines. However, it will be much below average rainfall in South Brazil and Argentina. So, above average rainfall in the Philippines and below average rainfall in Brazil and Argentina. We have had very good rainfall this past dry season. In fact, the dry season uh, was not felt that much because even during the Holy Week, we have had good rainfall actually. So remember, for La Nina, above average rainfall in the Philippines and Southeast Asia, and below average rainfall on the other side of the globe in South Brazil and Argentina. For corn, the USDA Foreign Agricultural Service, they reduced the Ukrainian corn production by 20% to only 25.8 million tons from the official USDA figure of 31.5 million tons. About 10% of the crop in Ukraine will be left unharvested due to lack of funds for fuel and storage. US corn demand is a disappointment for the bulls. As you can see, the graph falling down. So, with the US corn exports moving lower, and corn demand also for ethanol use has been dropping. It is a disappointment for the bulls. Poor corn ethanol margins may also reduce distillers' dried grains with solubles supply availability. So do not be surprised if there is less DDGS arriving in the Philippines and prices rising because ethanol producers in the United States are having a difficult time with the negative margins actually. For the Chicago corn futures, the sellers have taken control of the market. The 20-day moving average line is actually above the prevailing prices. So that is an indication that the sellers are in control of the market, with the market doing below the 20-day moving average line. So the corn market have actually factored in already the reduced Ukrainian supply. And there is now talk of some dryness in Argentina, and we can trace that dryness to the La Nina phase of the El Nino Southern Oscillation, which we discussed earlier, with dryness expected in Argentina due to the La Nina phase. US soybeans supply will remain tight nearby, say for the next 60 to 90 days, but we expect a bumper crop in South America in the first half of 2023. So it's a clash between a tight nearby supply and a bumper crop that is arriving from January to May of next year. Its stocks to use ratio are very low. The more important matter is how much stocks do you have compared to the projected usage. And we are actually at a very low level, expected at only about 5%. Although the latest USDA report raised that to about 6%. So there was a 1% improvement. That is why prices are reacting by moving lower. So this chart shows the high production expected for soybeans in the current crop year, but most of this supply will be coming from South America, and South America will harvest um, sometime in January to April yet. So that is when prices will, or the supply will hit the market and pressure prices to move lower. For coconut oil, prices have dropped dramatically by about 50% from just about 6 months ago. Prices have declined dramatically because copra production is seen to be better this year because of also the La Nina phase of El Nino Southern Oscillation that we have had the past 2 years. But copra dealers are confident that prices will rise seasonally to about 42 pesos per kilo from the current 39 pesos in the Lucena area, and from 35 pesos and 50 centavos to about 40 pesos in the Davao area. Oil World, respected statistician and supplier of information to the vegetable oil and oilseeds market, they see CNO or coconut oil production declining by 8%, while palm kernel oil, the substitute lauric oil to coconut, is seen to rise by 3%. Prices have started actually grinding higher. So I see higher prices for coconut oil until probably the end of the first semester of the coming year, because there is a seasonal decline in prices starting in the third quarter of each year. This is due to ample supply typically in the third quarter because that is our after the rainy season. Copra expeller cake prices have unusually been high this year due to good export price levels at about 17 pesos per kilo. This is freight on board or picked up in the Visayas Mindanao region. The freight tracking and handling cost from Bismin to Bulacan is about 4 pesos per kilo. So the comparative price is about 21 pesos per kilo for copra cake. So if Lucena prices are doing below 21, they are already competitive because it's costly to move copra cake from the Bismin area. There is a low inventory of copra cake in the Luzon area because Luzon copra cake is very competitive compared to copra cake coming from the Bismin area. So Luzon prices are at about 17 to 18 pesos also per kilo pick up in the Lucena area. However, tracking costs to Batangas feed mills and Bulacan farms, big farms, and feed mills is only about 1 peso to 1 peso 20 centavos per kilo. So even at a parity price of 17 pesos, Luzon copra cake remains cheap. And I noticed that the prices today are not following our seasonality ratios. Typically, prices are very low from August to the first half of October, but with the hogs bigger in November and December, and population also bigger in preparation for the big surge in demand in November and December, prices typically move higher. But this year, prices already started moving higher as early as July and have remained elevated despite the lower hog population uh, decimated by the African swine fever. Global oilseeds production is expected to rise by 15 million tons, um, led by soybeans and rapeseed. So with a lot of crushings, we would expect a better supply of soybean meal and rapeseed meal, which are the primary sources of protein for animal and aquatic feed. The stocks to use ratio um, will actually rise, indicating that there will be ample supply of oilseed mills come next year. For palm oil, we expect a tighter supply with the uh, stocks to use ratio, while ending stocks will rise to 15.84% from 15.11. The stocks to use ratio actually declined because consumption is outpacing um, production for palm oil. So we expect palm oil to remain well supported in terms of pricing. And also palm oil is doing at a $600 to $700 discount compared to soybean oil. Palm oil is also has also a better availability compared to soybean oil. This is our chart for the Bursa Malaysia Derivatives Exchange palm oil futures prices. Um, with the prices retreating from our horizontal red diagonal line, which is an important resistance area, we would expect palm oil prices to retreat somewhat. In fact, they have entered the bear territory with palm oil prices doing below the 20-day moving average line. The recent rally failed at an important resistance area, and we now have a double top pattern, top here and a top over here. So that would indicate that we may retest the lows. Maybe we could retreat by another 200 points to the 3,900 to 4,000 ringgit level. There is also a confluence on this area on a Fibonacci number of 38.2%. The decline and the recent bounce of 38.2% of the decline is an important Fibonacci number, 38.2%. So there is confluence. Fibonacci, Leonardo Fibonacci is actually an Italian mathematician who observed that in nature there are Fibonacci numbers. So if you have your height measured and say it's 100%, So if you measure from your navel up to your head, that is 38.2%. So maybe when you get home, try to measure your height and also from the navel to your head. If it's indeed 38.2%. And from your navel down um, to the floor, that's about 61.8%. So that's a Fibonacci number. But going back to palm oil, prices are now retreating um, and set to provide some relief to high prices of crude palm oil and palm oil to our feed rations. For soybean meal, the bulls have shaky control. They're having difficulty piercing our red horizontal line here, and they're poised to retreat to the 20-day moving average line. And then let's see what happens, because supply remains tight until probably the end of the year, but there is ample supply coming in by early next year. Furthermore, Argentina from time to time has a promo for their soybean meal and soybean oil products. They provide a very good exchange rate for exporters from time to time. So because the exporters in Argentina would prefer to hold soybeans and soybean products rather than hold Argentine pesos, which keep on depreciating. So they would rather hold soybean products. So when that happens, there is a drive towards more exports. The price of soybean meal went down, as we saw sometime in September when Argentina exported a lot of soybean meal and soybean oil. Argentina is the largest exporter of soybean meal to the world and also of soybean oil, although they are not the largest soybean producers. For soybean oil, prices remain on an uptrend, primarily due to the shortage of diesel. So, soybean oil is a feedstock for soy biodiesel, and the soy biodiesel demand has been good due to the shortage of biodiesel or diesel that started in Europe and has now spread to the western part of the United States, and the shortage is moving to the east coast of the United States. We have felt the effect of this shortage of diesel in Europe. Uh, if you haven't noticed yet, prices of diesel, pump prices in, say, in Metro Manila uh, are higher compared to premium gasoline. So mas mahal na yung diesel ngayon kaysa sa gasoline, which is unusual, but it is an effect of the tightness in supply of natural gas and energy due to the Ukraine-Russian conflict that is going on, plus the sanctions initiated by the United States against Russia. For wheat, the bears have taken control of the market actually. All the bad news have been absorbed already. When I say bad news, bad supply news, um, like export restrictions out of Ukraine. However, Russia has a bumper crop for wheat. Probably they have advanced knowledge already that there will be a conflict. So the Russian farmers were made to plant more wheat and use more fertilizer before fertilizer prices hit the roof. and talks are now ongoing, sponsored by the United Nations and Turkey for the export of Ukraine wheat. Um, the price is doing below the 20-day moving average line, indicating that the sellers or the bears are in control of the market. So we have moved past the shortage of wheat brought about by the Ukraine-Russian conflict. For feed wheat, the bears also remain in control of the market. The bad supply news, the tight supply have been priced in the market already. And for the dry shipping index, uh, an indicator of our freight rates, they have already gone down from astronomic heights. While supply chain bottlenecks remain, freight rates have been going down and probably affected by demand destruction, and also the rising interest rates are having their effect on consumption. So the central bankers have a contractionary monetary policy of raising interest rates to mitigate or control inflation. It is now the job of government to prevent employment from uh, moving lower by using a fiscal policy to prevent unemployment from rising. With that, I thank you and thank also e-agricom for the opportunity to be with you today.